I request all the participants to keep yourself on mute.
Please confirm whether my voice is audible to you all or not.
Yes, sir. It is audible.
I think Sir can't hear us.
Please write in the comment box whether my voice is audible or not.
Sir, your voice is audible.
Yes, done. Uh, Please confirm again whether my PPT is visible to you all or not.
Yes, sir, we can see your PPT, sir.
PPT is also visible. Let's start
Yes,
with the concept. Okay.
yes.
So my name is Kaushal, and today we'll be discussing about more about the Bombay Stock Exchange and the Sensex. We will also be discussing many terminologies, which is very important when you actually there in the market. Okay, so what are the things you should keep in mind before making your investment? Okay, and different terms like what your I mean how you should invest, how which are the different areas where you can target to make your investment. Okay, so let's start with the concept. Before starting with the actual concept, I would like to give you some brief information on BSE and Sensex. So BSE, the full form of BSE is Bombay Stock Exchange. Bombay Stock Exchange was started on 9th July 1875. There are almost 5,439 companies listed in the Bombay Stock Exchange. Bombay Stock Exchange is the Asia's oldest stock exchange, and it's the world largest stock exchange in terms of listed companies. Okay. Now I would like to give you some information on Sensex also. Sensex is an indicator which actually indicates that how the companies are performing on that specific day. So today, if you will see, Sensex was in the red, which means that the maximum companies which are been listed with the Bombay Stock Exchange were not performing well, because of which the Sensex point was falling. Okay, so out of 5,439 companies, the top 30 performing companies who can give a consistent performance and a good performance throughout the year or maximum months, they are being grouped into the Sensex. And if these 30 companies are performing well, you will see that on that specific day the Sensex is points are rising, and if these top 30 companies are not performing well on some specific day, you will see Sensex points are falling. So let's start with the concept: how to control your financial future, how you can target to make your investment, which are the different areas of an investment, how normally the returns are being generated. Okay, let's start with the concept. So before making an investment, you should know about yourself. What are the different sources of income? Okay, and what are your normal expenditure? What are your expenditure pattern? Okay, so these are some of the things you should know about yourself, and accordingly you should make a plan to make your investment. Okay, so let's start with the concept. What are the things you should go through before making an investment in certain specific area? So very first concept is you should know about your sources of income. Okay, how many sources of income do you have? How much normally you earn? Okay, and from I mean, how is your income pattern? It means that you are getting salary or you are having your own business, and accordingly you can think about the further concept, that is mandatory outflows. So after understanding about your income, there are certain mandatory outflows where you're normally you will have to spend your amount, and these are some of the outflows. It doesn't depend upon your income. If you will not earn also, then also you will have to spend. Normally it is for food, clothing and shelter, which is necessary, very much necessary. So these are some of the mandatory outflows. Okay, you should know this pattern also. And after that, what you do to maintain your standard of living, how much you spend in different areas, are known as the expenses. And the last one is all called as savings. Okay, so normally the saving actually depends upon your income. Okay, so after deducting mandatory outflows and expenses, you will reach to the concept that is on the saving. So why normally people save? Okay, to support their family, for the child educations, for the children marriage. Okay, uh, to maintain a standard of living by purchasing or investing in two-wheeler, four-wheelers. Okay, many of the people are having a dream to buy a house. Okay, many people have started thinking about their retirement also. So these are some of the areas where you normally require your saving. Okay, which is very much important. So that all depend upon your income. Okay, after deducting certain after deducting certain mandatory outflows and the actual expenditure, you will reach to the saving concept. And these are some of the concept what normally people save it. Now we'll try to understand the inflation concept, which is very much important, guys. Okay, so what exactly we have to understand in the inflation concept. Okay, you might be knowing about the inflation, that inflation is nothing but where normally you see the currencies are depreciating, the cost of goods and services are rising. So if you will just compare the cost of fruits and vegetable, pulses, chocolates, and transportation, you can easily compare with the previous year, and you can easily see the differences, how the values of all these things has been increased from the past few years. Okay, so it is nothing but because of the inflation. Okay, normally people just invest this much. Okay, just try to understand this dot. People normally invest only up to this much. The spending or the expenditure of the people are this much. Okay, just see the dot of this spending one. Okay, so it is almost 4 5 times larger than the investment uh, dot. Next is people normally pay taxes also, and how much people actually invest, more than that people pay taxes. And the last one is inflation. Okay, so this is something which normally people ignores, but you should not ignore, because this is the thing which normally takes your investment down. Okay, let's talk about the fixed deposit, how inflation actually affect your investment. Okay, so normally there are many traditional people who still believe that fixed deposit is a very good area of investment. So we'll just try to understand the fixed deposit area. We've taken an example of inflation also. So if you have a 1 lakh rupees with you, right, and if you are investing your amount in fixed deposit, you can expect 6.5 percentage of return from the fixed deposit. That 6. By just adding that 6.5% of interest, your amount will grow to 1,06,500 rupees. So this amount is normally called as the amount before tax. Now you will have to deduct tax, and we have assumed that tax has been calculated at 30%, which may be approximately 1950 to 2,000 rupees. Now if you will just deduct that amount from 1,06,500, which is before tax, your amount has came down to 1,04,500. That is after tax, right? Now you might be thinking that you are still in profit, but it is not like that. Normally on this amount, the inflation works. Okay, after 1 year, the inflation works, and right now the inflation percentage is around 7%. Now you are 1,04,000 after deducting 7%, because 7% is not working. Actually, this does not decrease your income. It actually works on your whole amount. Okay, what you have invested and right now what you have earned. So if you will just deduct 7% from your total uh, amount, you will come down to 97,664. Just try to understand. You invested 1 lakh. After tax, you reach to 1,04,500, and because of inflation, your amount has came down to 97,664. You will not be able to see that your 1 lakh rupees has came down to 97,664, but you can feel it when you will go to the market after 1 year with having 1,04,000 cash in your hand, and after 1 year you will see that you will have to pay more 3,000 rupees what you used to pay in the previous year. So this is all because of inflation. And normally inflation also works on the lifestyle, because previously the cost of mobile was very high, and many people don't used to think to keep mobile with them. As the day passed, year passed, structure passed, mobile phone becomes attractive, and to the 2019, mobile phone has also become mandatory in many's life. Okay, still people are not much interested in different areas, but still it has changed the pattern. And today the student which who are at the age of 9, 10, 11 also, they are having their own mobile phones. Okay, so this is the lifestyle inflation which has been changed, and today people have to, you know, invest certain amount in this area also. Now we'd like to understand how fixed deposit works, and what about how uh, is the what is the pattern of fixed deposit as compared with the inflation. So if you invest 1 lakh rupees in fixed deposit for 5 years, 10 years, or 15 years, how the returns actually gets generated in fixed deposit, and whether it is able to beat inflation percentage or not. Okay. So if you invest 1 lakh rupees in fixed deposit for 5 years, you can expect that the post tax return is 5.85%. Okay. And inflation rate is 7%. So it is not possible to beat inflation in the longer duration of time also. And as you will keep your amount in fixed deposit, you will see that the gap has been widened, and you will be in a loss in the near future. So this is how normally the inflation uh, works on fixed deposit. Okay, here black bar indicates fixed deposit return, and red bar indicates inflation percentage. So as you will hold it for a longer duration of time, inflation, your fixed deposit return will not be able to beat inflation. Okay, but if you will understand, if you had have invested your amount in equity, how it would have worked. Okay, so it means that if you are investing your amount for 5 years, okay, for 10 years or for 15 years, this is how normally your investment works. Okay, after 5 years or 10 years, you can see that you are actually expecting a 15% of return in equity on the from the very first term. Your equity is able to beat inflation, and if you will hold it for a longer duration of time, you can see that equity is not inflation is not able to beat equity returns, and equity has outperformed the inflation in a very easy way. So these are some of the types of products where you can make your investment in different areas, that is bank FD, equity, gold, mutual fund, insurance, real estate, bonds, PPF. So these are some of the area we'll have to understand one by one. So here is the product feature. If you will focus in this side, uh, here are the assets where you can make your investment. And as per the risk, returns, taxation, and liquidity, the things has been explained. We will just look in the equity stocks investment. As the risk is high, returns is also high. Okay. If we talk about mutual fund, the risk is high to moderate, the return is also high to moderate. If you will focus on insurance, no risk and no return. If you invest your amount in real estate, it's moderate and moderate returns. Okay. If you talk about taxation, in bank FD, on interest the tax is very high, and again on real estate the taxes are very high. Okay, but if you focus on equity stocks or mutual fund, the taxes are very moderate. Okay, so as per this, you can also focus your investment in different area. And liquidity means how you can easily convert your investment into uh, cash. Okay, so this is all called as liquidity. So that is it, how you can focus and to make your investment in different areas. This is the product quilt. Product quilt means these are some of the sectors where you can focus to make your investment, and this is how normally the percentage returns works. Okay, if you will focus in the year 2012, mid cap was able to provide you 38.52% of return, but in the year 2013, if you will see mid cap, it gave minus 5.73%. Okay, so here if you hold it for a longer duration of time, just see that your investment will rise, and you will see yourself that you are in a better return. Okay, so there are different sectors like real estate, large cap, international, government sector, gold, credit risk, and accordingly you can make your investment. I would like you to note on 2014 small cap returns. Okay, here the return was 62.91%. Okay, but in the year 2018 it gave a negative return. Again in 2019 it gave a negative return, and again in 2020 and 21 it gave 30 to 58%. So this is how normally you can focus and make your investment in different sectors. Okay, next is asset allocation. Now what do you mean by this asset allocation? Asset allocation means where you are actually investing your amount and diversifying your amount by investing in different area, and that depends upon your risk tolerance, goals, and investment frame. Okay, so many people may focus to make their investment in stocks, bonds, commodities, rights, ETFs, exchange traded funds. So that all depend upon the investors' risk tolerance, goals, and the investment time frame. Here is the story time. Once there was as an Akbar, which actually wished to award a Birbal for his intelligence and wits. So what happened that Akbar thought that Birbal is most intelligent person in his society. So I would like to take test of his intelligence. So he told that uh, what you will give me if I win. So he told what you want. So here Akbar said that I want a 1 grain of rice on the first square of chessboard, and every time if you will move ahead, just double it every time. Okay, like this. 1 grain of rice in one box, and every time you move ahead, you will have to double it. Okay. So what happened? So here the Akbar actually accepted, and he started putting 1 grain of rice in uh, 1 grain of rice in one box, and 2 grain of rice in second box, 4 grain of rice in third box, 8 grain of rice in fourth box, and on and on. When they approached at 20th square, King was had to give a Birbal 5,24,288, and he was just at 20th square. Just imagine at the end, Akbar admitted his defeat, and instead of giving him rice, he gave his most favorite palace to Birbal. So this is nothing but power of compounding. Normally, power of compounding is nothing but returns on returns. It means that whatever returns will be generated, it will be again get invested into uh, your investment, and the units will grow, and again it will generate the return. So here he also said that compounding interest is the eighth wonder of the world. He who understands it earns it, and he who doesn't pays it. So this is how normally you should stay invested in the stock market if you want to earn a very huge return in the near future. Next, we'll try to understand which asset class beats inflation and is tax efficient. So according to you, which asset class beats the inflation and is tax efficient? So here normally the answer comes is nothing but equity. Equity is the asset class which can easily beat the inflation. So this is how normally the averaging around you can see that from past 42 years, the stock market has provided 16.3% of compounding annual growth return. Okay, it has provided a very good return. That is 16.3% from past 42 years. The next area what we will be understanding is nothing but mutual fund. What do you mean the mutual fund? Mutual fund is nothing but the pool of money which is been actually taken by the side of fund manager. So here are the investors who invest their amount in mutual fund. It means that they will give their amount to the fund manager. Fund manager will investors amount in the securities, and the security will normally generate the returns, and it is being passed back again to the investors. So this is how normally the mutual fund works. High liquidity at NAV based price. There is a high liquidity. Next, the investment size is very low. You can just start SIP at just rupees 500. Okay, on per month basis also you can start making your investment in mutual funds. Next, the risk is minimized through diversification, because if you invest your amount in mutual fund, your investment actually get diversified into different stocks. It may be get diversified into 20, 30, 40 or 50 stocks. Okay, so this is how normally your risk get minimized through diversification. There are various types of funds to choose. You can choose ELSS, ATF, uh, tax saving, growth fund, debt fund, balance fund. There are various types of fund you can choose. Here you have a facility of SIP and HWP also. Investment plan and withdrawal plan both you have. Okay. There are another facility that is transfer plan also. I would like to give you such information in the upcoming slide. I would like to just focus you on in this area, that is equity sectoral indices. So these are some of the schemes what are been actually made for the investors. You can invest your amount in equity sectoral indices based also, ELSS, Here is normally a 3 years lock-in period. Your amount will be linked with the equities, and as the equity market grows, you can see your investment is also growing. You can invest your amount in debt also. Okay, liquid funds are also there. Okay, which gives normally a good return as compared to the saving account in bank. Short term, long term, hybrid balance fund, your amount can get invested in two different area at the same time. If you choose balanced fund or hybrid fund, your 65% of amount get invested in equity and 35% of your amount get invested in debt fund. Okay. You can invest your amount in gold also. You can invest your amount in international funds also. So these are some of the areas where you can focus and make your investment. The next is open-ended and close-ended. Normally, open-ended, if you invest your amount in open-ended scheme, it means that you after 1 year you can easily take back your amount, and you can just reinvest also, and you can buy more units also. But close-ended is not like that. There is a fixed maturity, and uh, there is a fixed maturity, and after maturity only you can get back your amount. Okay. So there is a growth fund also, dividend fund also, dividend reinvestment process also. Growth means investing your amount 100% in equity. Dividend means you will get returns in your dividend. And if you take dividend reinvestment policy fund, it means that your dividend will get reinvested in the same scheme. From that amount, more units will get purchased. So it is all called as direct and the regular plan. Next, if you want to invest your amount in mutual funds, what are the things you should check? The first is return of 10-year, 5-year, 3 years, in months, 6 months, 3 month, 1 month return, expenses ratio. It means that you will have to pay any amount to broker or not, or any commission. Portfolio compositions, how many stocks are being comprised in your one scheme, size of fund, how much amount normally people have invested in that specific scheme. If you are investing in mutual fund, you are investing in small cap, mid cap, or large cap investment plan. It means that you have invested your amount in equity or dividend payout. Normally you should always check the performance of your fund with the benchmark also, which is also called as the index. Normally the category wise average has been seen, and you can get more information of mutual fund on Value Research Online, Morningstar. And Money Control is the best site. Normally I recommend Money Control. So this is how you can focus to make your investment in mutual fund. You might be knowing about the COVID impact on stock market, where the whole world has saw more than 20 to 30% of correction because of COVID-19 crisis. But if you would have invested your amount in mutual fund, there were not much different. There was not much impact in the mutual fund because of this bearish market, because the large cap just witnessed less than 87.5% fall than the actual fall, and mid cap has saw 72.5% lesser fall than the actual fall, and multi cap has saw 63.2% of fall, less fall as compared to the actual fall. So healthcare concept has become very important today. You should have healthcare. You should invest your amount in healthcare fund, and you should focus on healthcare schemes also. And consumption fund and technology fund has boomed during this area, during this time. So this is how normally the mutual fund has grown from 32.43 trillion to 38.89 trillion from April 2021 to April 2022, which represent 19.94% of increase. So this is the risk category. If you invest your amount in stock market, you can focus your investment in debt, hybrid, and equity. If you invest in debt, you are hitting on the target. Normally you will earn and you will come out from the market. But if you are focusing on equity and hybrid, it is less risk. It is more riskier than the debt, and equity is the riskiest area because you are very far away from the target. So you are on 100% risk. You may earn or you will have to face the loss. So these are the risk categories. As I will move ahead, the risk will increase from liquid to short term to credit opportunities. Income fund is more riskier than the credit opportunity. Balance fund is more riskier than the income fund. ELSS is more riskier. Equity diversified is more riskier. Mid cap is more riskier, and small cap is more riskier. So this is how normally the risk categorized are been done. Okay. The next is mutual fund map to your goal. So if you are thinking to invest your amount in mutual fund for 1 year, uh, or if you are thinking to get the maturity by investing your amount in mutual fund, uh, so it means that you should focus on liquid mutual fund, which may give you a more return than the saving. But if you are thinking to get returns or the maturity within 3 years, you should invest your amount in debt mutual fund. Normally, for people focus to go on vacation. If you are focusing the maturity before 6 years, you should invest in balanced mutual fund. Normally, the focus is for buying the car. And if you are focusing to get the maturity before 10 years, you should invest in diversified equity mutual fund. Normally, the target is to invest in children's education, children's marriage, dream house. And if you are focusing to be in the market for the longer duration of time, say for more than 10 years, you should invest in diversified mid cap, small cap. It means that you are focusing on retirement, wealth creation for the next generation, etc. etc. Next is SIP. What do you mean by SIP? The full form of SIP is systematic investment plan. In SIP, you can invest on daily, monthly, weekly, and quarterly basis. You can just start at rupees 500. There is a direct deposit. It means that from your bank account, your amount will get deducted. Okay, from directly from your bank account. It normally brings the discipline. Uh, Here you can see the power of compounding concept also. Okay, power of compounding means where your returns will get again reinvested into the specific scheme. If you focus on making an investment of 1000 rupees per month, okay, in SIP for 5 years, 10 years, 15 years, 20 years, 25 years, 30 and 35 years, you can get your investment will be of this much of amount. And if you will see the returns on, if you invest your amount in debt, balance fund or equity fund, for at 9%, your 60,000 will give you a return of 75,000 to 75. If you invest your amount for longer duration, say for 25 years, 30 years, or 35 years, your 3 lakh will become 10 lakh, 65,000 if you invest in debt. But just focus on equity returns. Okay, just focus on equity returns. If you invest for 25 years and you keep your amount in equities as and you stay invested, your 3 lakh rupees will become 27 lakh, because normally the average return in equity is around 15%. Okay, for 30 years, you can expect your returns by 56.31 lakh. And for 35 years, you can see that your 4 lakh 20,000 has increased to 1 crore rupees. But if you invest 5,000 rupees per month, but it means that if you increase your investment amount, okay, again, I would like you to focus in the last three areas, that is stay invested for 25 years, 30 years, or 35 years. As longer you stay invested, more you will see the returns. That is, by just investing 15 lakh rupees, you will see yourself yet your portfolio has grown up till 1.38 crore or 2.81 crore or 5 crore approximately. So this is how normally you can expect the returns. Here, I would like you to focus on equity SIP. The same concept I have came up with, but with the differences. Okay, if you invest 1,000 rupees or 5,000 rupees in different area for 5 years, 10 years, 15 years, and on, your fund value, what you will see, will be 87,000 or 4,37,000. By just investing this much, your fund value will become this much, and the differences what you can expect is this is the returns. Okay, but by just investing a few more amount, that is 4,000 rupees per month, you can see that apart from getting the returns of around 2,40,000, by just investing, you can just see the returns of 3,50,000 in different equity SIPs. Okay, by just investing 21 lakh, you can expect 4 crore rupees portfolio. Okay, so this is how normally the equity SIP works. in different scenarios. Okay, so just focus here in these three areas. That is for holding a longer duration of time. You can see that it can create a huge return. The next is the step up SIP. Now, what do you mean by step up SIP? Normally in SIP, you invest the whatever you invest in the first year, the rest of the remaining year you will invest that much amount only. Okay, and you can expect 9 lakh rupees, 11 lakh rupees, or 13 lakh rupees in different areas by making an investment of 60,000 per month. But if you choose step up SIP, it means that you will tell to the fund manager that every year I want 5% of increment in the next lump sum investment. Okay, that is 1,55,000. By just investing 1,55,000, you can expect this much of returns. Okay, that is 2,53, 2,98, 3,53. This is how normally you can expect. Start investing today. This is very much important for the youth people, because if you don't make you can say that you will lose around 5% of start at the early age. So what's the example? So here is the example that you are at the age of 25. Okay, you are at the age of 25 by starting your SIP by just 1,000 per month, and if you expect 15% growth, uh, if you reach at the age of 60, you can expect that your portfolio has been grown to 1.21 crore. But if you don't start at the age of 25, instead of that, you will start at the age of 26. At the age of 60, you will see that your portfolio is giving you only 1.05 crore. At the age of 27, if you start making investment, your portfolio will give you only 0.91 crore. At the age of 28, you can see that your investment is giving you a return at the age of 60 will be 80 lakh rupees. So just see, just delaying for 2-3 years, your in returns is directly coming from 1.21 crore to 80 lakh rupees. So what is the benefit of starting early? So here is the story time. Once there was a person named Raj and another his friend named Ajay. Both were at the age of 25 and they thought to get retired at the age of 55. So they were planning to make an investment in such area which can give them a happy retired life. So what happened? Raj started making an investment by just starting at rupees 10,000 per. He got okay, a return of 12% per annum. Okay, so he started making investment, and Ajay also started making investment, but at the age of 40. After 15 years from where the Raj started, after 15 years, Ajay started making investment, but he started making an investment more than or double than more than double what Raj was actually investing. Okay, so he started making an investment of 25,000 per month for 15 years because both thought that they will get retired at the age of 55. Okay, so both started making investment. Okay, and he was just expecting that he will also get a 12% of return by investing more. He will actually get a more returns what normally Ajay was expecting. Okay. So what do you think who might have earned a good portfolio? So this is what the Raj creates a wealth of 3.08 crore by investing 36 lakh, and Ajay created 1.18 crore by investing 45 lakh. By investing 45 lakh, he reached to 1.18 crore, and by just investing 36 lakh, he reached 3 crore rupees of portfolio. So this is how Raj creates more wealth by investing lesser amount. So this is what it is called as longer the term, higher the compounding effect. So this is how normally you can expect the withdrawal plan by investing initially by 10 lakh rupees with the number of monthly installment 60. You can easily withdraw 3,25,000, but your 10 lakh will remain as same as 10 lakh. It means that if you are expecting 3,25,000 returns after installment of 60, you can see that you have got a return of 6.5%. After deducting tax, you will reach at 4.5%. But instead of investing in fixed deposit, if you have invested in short term for 10 lakh, you would have got a withdrawal of 3,25,000 also. Instead of that, your 10 lakh would have reached at 10 lakh 77,489. Okay. So this is what called as pre-tax return, that is 8.1 percentage returns, and after paying tax you would have reached to 6.48 percentage. Okay, this is the normal saving to mutual fund. If you would have invested in fixed deposit for 5 years, your 5 lakh would have became 5 lakh 40,000. It means that you can expect a return of 3.5 percentage. But if you invest in any other scheme, that is 5 lakhs, okay, in a liquid fund or like that, your amount may become 5 lakh to 7 lakh 93,000. Your expected returns will be 17.22, and this is how normal you can expect, that is 13.97 percentage of returns. Now I would like to give you information about different types of insurance, that is life insurance, motor insurance, health insurance, travel, property insurance, mobile insurance, cycle insurance, and bit size insurance. So these are some of the insurance you might have heard in your life. You have already heard about life insurance, fire insurance, and marine insurance. But these are some of the areas which is equally important, and you should hold it so that you can easily face, the problematic scenario. So why normally people should buy life insurance? Because there are financial dependents, and you should not create a liability on your dependents. So because of which one should buy life insurance. So it has been said that the family, the karta of the family should have, term plan. So what are the benefits of the term plan if you are actually focusing on the sum assured of 1 crore? What are the benefits? So these are the premiums what you will have to pay at certain age. It means that if you are at the age of 25, you will have to pay 9,285 premium per annum. But if you are at the age of 35, 45, and 50, you will have to pay this much. That is 17,000, 31,000, and 37,000 approximately for sum assured of 1 crore rupees. So if you are young, that will be much better. Okay, so easily you will be able to reach 1 crore rupees. I would like to focus you on. I would like you to focus on this terms, which is very important, guys. Okay, that is, if you are focusing on traditional plan, that is an endowment plan, how it will work. I would like to give you first this information, and after that I will come to term plan plus debt mutual fund. If you are investing your amount in normal traditional plan, okay, it means that if you are investing in insurance, your monthly payment will be 4,200 rupees, and for next 15 years you will have to pay a certain amount. So your total insurance payment will become 7,56,000. Okay, your total insurance payment will become 7,56,000 for 15 years. If you are investing 4,200 per month, you will get the insurance coverage of 6 lakh rupees also, and the maturity benefit you will get is 11 lakh rupees. But instead of endowment plan, if you would have invested in term plan plus debt mutual fund, you would have paid only 400 rupees in the name of term insurance per month, and 3,800 you would have invested in debt mutual fund. How it would have worked? After 15 years, you will see that you have paid 72,000 rupees in term plan, that is in the name of insurance. You would have got 25 lakh as the insurance coverage, and the maturity you would have got is 23 lakh. Okay, so this is how normally you should focus on different areas, that is traditional plan versus term plan and debt mutual fund. You would have got 14 lakh, not 23 lakh. I would like you to focus on ULIP and term plan plus equity mutual fund. If you would have invested 4,200 in ULIP for 15 years, you would have paid 7,56,000 in the name of insurance. You would have got the insurance coverage of 6 lakh, and the maturity you would have got is 16,69,000. But if you would have invested in equity mutual fund in term plan plus equity, 400 rupees in the name of term plan and 3,800 you would have invested in equity for 15 years, you would have paid 72,000 in the name of insurance. You would have got 25 lakh as an insurance coverage, and the maturity benefit you would have got is 23 lakh 43,000. So this is how normally the investment area works. Next is health insurance area. Why you should focus on health insurance? Because healthcare is becoming increasingly expensive. Immediate cash arrangement is very much required. Liquidation of fund is very much important. Cashless treatment You can get the cashless treatment also if you have bought mediclaim. Income tax benefit you will get under section 80D. Okay. What are the benefit of investing your amount in health insurance? So normally it covers against the medical expenses. You can get coverage against critical illness. Cash line benefit also you will get additional protection over and above the employer cover. You will also get tax benefit. Cashless treatment also you will get the benefit. If you are below the age of 60, you will get a benefit, at least 25,000 for yourself and for your family. And if you are senior citizen, you may get 50,000 of benefit also in tax. These are some of the do's and don'ts if you invest in IPO. Normally, what do you mean by IPO? The full form of IPO is initial public offer, where you focus on investing in such company who have actually came in the market for the very first time to make or raise the capital. So these are some of the do's. You should always read the red herring prospectus. What is a red herring prospectus? It's a prospectus which gives more information about the company. It is very useful to the investors because it provides the whole detail about the company, working, financials, promoters, and the companies. Always check financial summaries and the company valuation. Understand the key strength area of this company. Understand objectives of the issues and company history, and use application supported blocked amount before making investment in the IPO. Okay, you should not invest that much amount which if you if you face loss, you will not be able to sleep in at night. Okay, you should not never invest in such a way. Always invest that much amount only which will not give you any stress. And these are some of the don'ts. Don't follow rumors or illusionary advertisement. Don't borrow money for making your investment in IPO. Don't invest in IPO without reading offer document. Don't invest based on prevailing bull run. Okay, do not invest money on gray market premium. Do not invest money in IPO based on advertisement or unauthenticated news. So these are the different tax rates between old and the new regime. These were the old regime tax rates. Previously, normally the tax used to be this much, and the new tax rate for this year is this much. Okay, if you are earning more than 15 lakh, you will have to pay 30% of tax. If you are earning less than 5 lakh, you will have to pay 5% up till 2.5 lakh. Okay, so if your income is up to 5 lakh, only sections 87A rebate can be claimed, and basic exemption is for the senior citizen above 60 years. That is 3 lakhs for the super citizen, for the senior citizen, and 5 lakh rupees for the super senior citizen. Okay, so these are the tax benefit. Now the new tax regime has been came, which has been simplified, and almost 70 or more than 100 income tax deductions and exemptions were removed. And the new optional tax slab has came up with the DDT exemptions. Okay, house rent allowance, standard deduction, savings. If you are paying interest on housing loan, you will get a deduction under section 80 TTA, 80 TTB for senior citizen. Educational loan interest is also exempted. These are some of the union budget key highlight for this year. There was no change in the income tax rules for individuals and company, allowing taxpayers to file update returns within 2 years of correcting the errors. If you invest in cryptocurrencies or virtual assets, you will be taxed 30%. Reducing alternate minimum tax rates, increasing tax deductions limit on the employer, and extending period of registration for the eligible startups. So these were some of the budget key highlights came up in the year 2022-23. Okay, better litigation management, tax relief for the disabled people, and any surcharge or cess on income and profits will not be allowed on the name of business expenditure. So these are some of the key benefits area. Now, if you want to invest your amount in BSE, these are some of the areas where you can focus and make your investment. That is in equity derivatives, currency derivatives, commodity derivatives, interest rate derivatives, debt, mutual fund, ETF, BSE, SME platform. So these are some of the areas where you can make your investment in different financial products. Okay. Now, if you have any query or if you have any problem, and if you want to file a case against the trading member or the defaulter member, if you feel that you have a grievance and but those queries have not been solved from the side of trading member, you can just launch a standard complaint against those all people who are been linked with your query. You can just raise the query, okay, by filing a complaint in different way. Okay, you can just visit to a investor service center of the exchange. You can just write a letter and post, or by a courier also you can send. By writing mail address, you can just file a lodge a complaint. Facility provided on BSE website under e-complaints, and there is a score web also. Okay, there you can visit and you can get more information about the SEBI laws and all. Okay, so it's a complaint redressal system. So if you want to file a complaint, okay, by visiting investor service center of the exchange, you can just click on this link and you will get the claim form there. As per the eligibility, you can clear the claim form. And there are FAQs also. List of defaulter member information are also there, and whatever the notices are being issued by the exchange is also there, and copy of public notice is issued by the exchanges for inviting claim against the defaulter. So this is how normally the starting procedures get started. If you want more information, you can click on the link and you will get more information about that. But if you want to post or courier your complaint, you can just click on this link, and by supporting the document nearest to the investor service center, you can just send it. By mail also, you can just send your complaint mail on the web exchanges. You can just click here and you will get more information about how to lodge a complaint against any trading member via mail. You can also select the modes of filing complaints by facility provided on BSE websites. Here you can just click on the link and you will start with the process. This is how normally the procedure gets started. If you want to launch a new complaint, you can click here. If you want to see the complaints, you can just, if you had already launched, you can just click on the complaint tracker and you will get more information about that. After clicking yes or no that you are the existing investor, you can move further and you will get the existing investor information, that is member name against whom you want to lodge a complaint. And by filling the information of PAN card, just clicking on submit, reset and back, you can lodge your complaint on the website. Okay. Next is modes of filing complaint. Modes of filing complaint. Once again, guys. Okay. But if the next window, what you will see will be complaint against. Okay, you will have to fill all this detail by just clicking on the submit. You can just lodge a complaint and you can move further with the e-complaint form. Okay, so there is the SEBI score area also. If you want to lodge a complaint on the SEBI website, you can just click on the link, and if you click on the link, you can just lodge the complaint on the SEBI also. Normally, why people lodge a complaint on the scores website? Because if you have complaint or you have made already complaint against the trading member to the stock exchange, but if you are not getting answer from the stock exchange also, you can lodge a complaint against stock exchange on the scores website, and the process will move ahead. Okay, normally if you will see that investor grievance redressal mechanism against broker and sub broker, you can lodge a complaint. It is available in the 24 cities. It's a time bounded, award binding on the parties also. At least you should see that if you are launching a complaint, the complaint should be up to 10 lakh rupees, and arbitration fee is normally exempted for the investors. Exchange set aside award if award is in the favor of investors. Advance payment to the investor is also being taken for pending matters of IPF, and normally the compensation is also provided to the investors from IPF if the defaulter is up to 15 lakh rupees. So they will get reward also on that. Okay. Next, I would like to give you information about the BSE website. That BSE website is the most popular website in the world of capital market. Focal point for information dissemination is also there. You can see more sites which is provided information ranging from trading information, where you will see live prices and the volumes from across all the sector. corporate information also you will see, that is quarterly result, shareholding pattern you will also get to see. Real time corporate announcement is also there, newly launched shares, okay, dividend declaration, all you can see. Next is BSc plus also, where you can get to about your personal investment portfolio management, valuation also you will get to know. You can just use BSc plus also. It gives you a facility that if you have already started with the investment in different demat, but you are not able to see, or you're not able to log in to that demat account, you can just link your demat account to BSc plus, and there you will get all your information of demat on that BSc plus app. New features are also added, and on the basis of converting data, useful information are also been seen. Trade verification facilities also available for the investors. Okay, so, and that BSc website or BSc plus you can easily download on your mobile and the tab. So this is the Sarthi app, guys. You can just scan this Sarthi app. Normally, it is for the new investors who are actually coming in the market for the very first time. Normally, here we will have to understand the misuse of social media. So what's the background? Unsolicited tips, calls, SMS, WhatsApp, Telegram, Twitter, Facebook. Normally, you receive a message on all this area. So advisory notices are being generated by the side of SEBI, TRAI, transfer, and agents exchange. It has been issued that you should not follow such circulars. BSc initiatives are being taken that on the website you can just see who are the defaulters, trading terminal are also there, mobile numbers, SMS to investors, all this you can get information on all these areas. And what is the objective behind this? The objective is nothing but investor protection and market integrity. Exercise necessary cautions. So here are some of the unsolicited message. So normally, if you see any unsolicited message, you can just lodge your complaint to the BSc, and BSc normally upload the defaulter company's information on their website, and normally ASM is being imposed. Okay, that is 25% on trading member. They will be charged penalty, and ASM shall be applicable in equity and equity derivative segment. They will be stopped for trading further without withholding of payout. So trading members normally have important contribution in SMS stocks information. So whatever the proceeds, what they will receive in the name of penalty, normally in the form of FDRs are being taken. Trading members to confirm the compliance, and any non-compliance may attract further actions such as levy of ASM or other disciplinary actions. Normally, ASM is nothing but the charges which is been charged on the defaulters. Okay, this is how normally the unsolicited messages are being seen. You can just see that this is how normally the SMS are being received by the investors on different social media. Okay, some multi-backers who don't follow, because nobody will be held responsible if you fall in trap in such stocks. Okay, so if you want to understand the trading terminology, just click on this tool. After clicking on this tool, you will receive the information, that is number of companies listed, number of companies listed in the equity capital available for trade, number of companies which have been listed and but are suspended, number of companies only with debt listed capital, number of AMCs being mutual fund schemes. So these are some of the information what you can get on the BSc website. Exchange also provide mobile separate mobile number, and here you can just note it down for reporting of SMSs if you receive any unsolicited messages on your mobile phone. So what's the objective of conducting this session from the side of BSc was to continuously aim to strengthen the market regulation framework for listing and trading of securities. Trading members should exercise necessary cautions while dealing on behalf of their client. So here is nothing but protect the integrity of securities of the market and interest of the investors. So that is it, guys. I have completed my topic. If you have any query, you can ask your question by putting your question into the comment box.
So please show the first and second slide.
Kindly fill the attendance form also. The link is being given. So please fill the attendance form also. And guys, if you have any query, you can ask your question, guys. If you have any query, you can ask your question by putting your question into the comment box, or else we'll wind up the session. Thank you,
Yes,
Sonali.
is there any query of yours? Is there any query? Any of the students have
First
any
and second
doubts? Can
slide.
raise their questions. Okay,
Like
so
if
then I
nobody,
continue. Yeah, Elia, you can continue.
like if nobody has a doubt, before ending the section, I would like to thank you, sir, and all the team who successfully done
No, I
this
can't provide
event.
any
Yeah,
tips and tricks. I can't provide any tips. If you have
sorry, sir.
any query, you can ask, but I can't provide such tips. Normally, I can only suggest to deal in the Sensex stocks or the Nifty stocks. That's it. Already been provided. Please scroll up, guys. You will get the feedback link. Thank you.
So before ending the section, I would like you all to switch on your camera to for a formal photograph, just for a few minutes. We would like to take a screenshot.
Yes, Elia, you can
Thank you for
continue.
all the coordination. Now I would like to end this session. So before ending, I would like you all to inform our upcoming two other sections, which is which is on 23rd, on use of accounting in fintech from 3 p.m. to 4 p.m. by CA Harshal Basir, and the last on 24th September from 7 p.m. to 8 p.m. on outcome of stream by CA Amok Desai. So I would like you all to join us in our next upcoming section also. Thank you.
On behalf of BUNTS and LEELA College, I would also like to thank Sir Kaushal Sir for conducting such a wonderful session for the students and guiding them throughout. Thank you, sir, for devoting your time. I will end the meeting here.